Yo, 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 what up, guys? What up, guys? How you all doing? How you all doing? Oh, I definitely hope you have a great day today. Today is the 3rd of March 2024, and yeah, today we're looking out to do a weekly forecast for the next week in my pairs, the euro, the pound, the AUD, and the USD CAD. And yeah, that's primarily what I'm looking out for to do today. And yeah, so yeah, let's start right in. What up? What up, guys? What up, guys? Yeah, what are we doing? I told you a bit ago we're going over the Euro USD, Pound USD, the AUD, and the USD CAD. And as you can see, for the next week, the 4th to the 8th of March, we're looking at what can happen in the markets, what is most likely to happen, where we can go and look for positions. But first and foremost, a little disclaimer: trading with real money does involve risk. I'm not licensed, a financial advisor, so you do your own decisions. If you're jumping in the market, may it be buy or sell, that's all your decision, and any win or loss is it's on your own. I don't have any influence if you don't allow it to, so do your own. And yeah, let's go ahead. First of all, we're right here in the Euro USD. We're in the weekly chart, as you can see. And yeah, what is my perspective? I think the best scenario here is just to do a top-down analysis. I mean, we're monthly, as you can see. We had a lower low and before the lower high, so technically we are right in the bearish scenario here. We have the opportunity to retrace higher back right into this monthly institutional candle right here, or this institutional move especially. So this is one opportunity, but we have also the opportunity to make kind of like a smaller retracement, because as you can see, from 2014 to 2016 we had this huge move to the downside, and we literally just overpassed the 50% retracement, or maybe this maybe the 60%. Okay, and so this could be kind of the same scenario here. You can see we're right in the 60s, and yeah, let's go further down. As you can see, we have this high here taken out with one weekly move. Then we broke structure. We broke this last low right here, and yeah, we retraced right into this. I'm gonna make this off for a second. You can see we had a few wicks right here. We spiked this one out, had a little retracement, and came back up higher, took out this, traded back into this imbalance, and yeah, took out all the liquidity, had a down move. And to see more detail, I'm gonna go into the daily chart. We have right now this as our actual trading range in the daily, and we had a retracement with this upside movement, and yeah, now we're expecting to do the same thing again, as I already said. And yeah, what we have in this retracement range, interesting. So from this to this, we have actually pretty balanced price action, as you can see. a lot of wicks, a lot of stuff. The one thing I can see right here, we took liquidity out here and we had this move. So if we come down lower, this may be another place of reaction where the market can stop for a bit, or we can get another retracement up to then go further down. That's one opportunity. And if we continue going higher, right here, this is balance again, and then we had this last down move before this huge candle here came in on the 14th of November. And what did we create here? We did create equal lows, and as market broke, technically broke the structure in the daily chart right here, went below this, we had at the same time this liquidity grab. So market went down lower under the equal lows, and now we are having the start of a retracement. And my two ideas are, if we go down a little bit further, my first idea is to continue this daily right here. So I'm gonna make this blue. We had a break of structure right in here. We're gonna get a retracement and then go lower. That's this right here, those arrows. And that's the first idea. And the second idea is we continue the 4-hour trend. You can see we continuously created lower lows and lower highs. So that's definitely a bearish scenario. We had I'm going to talk about one thing before we go deeper inside of this. Inside this last bearish range here, where we took the liquidity down here, we have actually equal highs up here. So it would make sense for market to go up there, grab that liquidity, grab that energy, and go back down lower. So that speaks for the higher retracement. But when we are in the 4-hour, what speaks for the lower retracement is right here. As you can see, we had the liquidity grab, massive move down, massive imbalance right here, and then market traded in with a huge wick, and we're seeing bearish movement. And that's here, as you can see, the H4 trend, 4-hour trend. And what else we can see? We go deeper inside. You can pull this bit of this side. We have actually here a break of structure. We took this low, we have the break of structure, and now we are looking to create a new low. We have a pretty good amount of liquidity right in here with all those wicks. There are definitely a lot of opinions formed, and that's a target for I think Monday or Tuesday. And if we go higher, we also have kind of like equal highs right here. I would expect market maybe to grab those highs and then go lower. That's okay for me, but if you go above this, I definitely also think that we grab this high and then have our higher retracement. So that's technically it for the bearish side. And on the other side, our idea is to make this move down lower. We have a few resistance zones in resistance. So we have this institutional candle which created this big imbalance, and down here a few candle which also took liquidity out and created an imbalance. The other lows are here pretty much balanced out, as you can see, created them. And I believe if I would be the one drawing the the charts, would able to see something like this. it would make sense, or maybe a deeper retracement, something like this. So yeah, that's it so far. And my idea on Monday is, first of all, to wait out for my trading time and then look, okay, in which situation are we at the moment. And I would pretty much like to see the liquidity taken from the last New York or last Asia session on Friday, and then create a break of structure to the downside, and have an entry right here with the target on this liquidity. So far so good. And I would actually say, yeah, that's it. If you have any questions, write it down below. Pretty simple, not that special. And we go down to the next one, to the GBP USD. GBP USD is normally pretty similar to the Euro USD, as you may know, and we have a few similarities and a few different type of things in the last few days, where yeah, you will see what I mean if I say differences in a Euro USD and a GBP USD. But first of all, we go again down to a little top-down analysis from the weekly down to the daily and so on. So as you can see, we pretty much had a very bullish move up here, and market retraced down here, and technically we took a low out, so that could be a break of structure. And yeah, we're a little special in here because that could also be inner liquidity. We had a huge institutional candle right in here, as you can see in the wick. That maybe in the daily, I'm gonna switch right here. As you can see, a huge candle, which market retraced into once here, and then retraced into this here, came down here, and started to make bullish signs. So we have two opportunities, or two options, I would say. What actually can happen? We can continue this trend here with maybe a retracement down here, because this definitely doesn't look like market has enough power to just go ahead and jump up there. Oh, everything can happen anytime, but you know what I mean. And yeah, a secondary, we had broken this low, so have something like this target down here, those lows, and we also have a level down here where what we can reach. So yeah, we definitely took the inner liquidity from this range right in here. You can see all the wicks taken out. This liquidity also taken out by this wick, and we have just one level left, and that's kind of this daily candle, because you can see we reacted right up to open of this institutional candle. We also could go higher right in here, but I fairly doubt it. Yeah, that's the idea. And the move that's kind of going together in my ideas is to go down here, or to do this. As you can see, those line up together. So a trade down to the daily imbalance down here would definitely make sense. But where we enter, we have to look deeper in the charts. So we go down lower into the 4 hour, and what do we have here? We you can definitely see we had a huge range in here where market didn't really go higher, didn't really go lower. That's maybe a bit interesting, but structure wise we had created this lower right in here, created higher highs, and market retraced down lower and didn't break this low just yet. And it's kind of rough because we know we had this institutional candle in here, market had a good reaction, retraced back down and had another reaction, but pretty much power wasn't there. As you can see right here, this was powerful move. And yeah, but if we continue the at a bit lower time frame structure, we had this consolidation, lower right here, took liquidity out, lower high, and then created another lower low. And now we're creating another lower high, and that could be the creation of another lower low. So it's kind of the same idea as I noted on the EURUSD, and that's a H4 trend continuation, and put this lower there. Oh, there we go. Good job. You can see the 4-hour continuation of trend. We had a reaction right in here. Continuation of trend. We had the reaction right over here. You can see that's lining up together. Makes sense so far. And then we look a bit deeper right in here. So that's our last range with this liquidity grab in here. Took those lows out, those highs out, and created this low. Took those lows out, that created that money grab created the move up there, and now we kind of like, yeah, we actually broke structure down here, and yeah, we seem to go down a bit. I'm gonna show you the structure without any markups. So yeah, that's a last low. We weren't create. Okay, I'm gonna start up again. We created this low, and we weren't able to create another higher high, and now we had a retracement down lower, and again we weren't able to break those highs. And what we did, we created lower high, lower high and a lower low with this wick right here. And now we're in this situation where we are creating another lower high and maybe another lower low. So that's technically my arrows down here. So we took out this liquidity down here, and I can delete those. And the difference, what I called it earlier, is definitely this right up here. This right up here is a lot of liquidity which market can still go into. And that doesn't mean that this 4-hour move here, which we are expecting, can't work or it annihilates it. No, it's not the case, because we still can take out all this liquidity up here and still react off this institutional move up here and go down low. Yeah, that's those two opportunities I have on the market, and those are those orange arrows down there. And if we compare a little bit more with the EURUSD, you can actually see we created those lows down here before, and in the GBP we created also those lows, but as you can see we have a divergence in here, and the divergence is something or an indicator where the market is manipulated. And as you can see, that's a harsh wick. We go down lower in the 1 hour. We took out all those lows and those equal lows down here. A lot of money got into the market to get those lows out, and market moved up high. We didn't create a higher high yet, but the idea still stands to oh, we didn't see this wick down here. Liquidity is definitely taken. We still have our opportunity to take out those highs and react off this mitigation up here. So something like this. But we also have this liquidity grab and this liquidity grab. That's the bearish side with the orders, and that's the bullish side with the orders. So it's kind of deciding right in here if the market stays with the bears or goes with the bulls. So if we go above this high, I definitely think we take out this, take out this, take out this, and then we have a reaction in this rest imbalance or mitigation. So far, so good. And yeah, that's a reason why I'm definitely gonna mark up this 1 hour institutional candle as well. You can see this is also the 1 hour, and the 15-minute is a bit more detailed. As you can see, we had this liquidity, this equal highs right here, and we had a good reaction, and then the move came in, and the main part of the move is definitely this candle. So same thing as in the euro, I would believe, okay, we can go above this high and then create a lower lows, but we also can just go lower down here, create new lows, and then go lower. So that's the idea so far. Would I trade sells up in here or up in here? I definitely would consider to take sells, but definitely with a sense target with sense, because we definitely have this huge institutional move. So target should be those lows here, and yeah, if we also already went down lower to create a setup, I just wouldn't take any trades. That doesn't make any sense for me. I would definitely wait to see this low taken or go above this and then take sells. Yes, that's it for the GBP/USD for next week. And yeah, let's head up to the AUD/USD. All right. Back into the weekly chart. Yeah, the same thing as in euro and GU. We have a bit of a different outlook, or a different higher time frame, definitely. So you can see we had kind of like this monthly move down here, and market had this expansion. We have this imbalance right in here. Market reacted there. We're able to create a higher high, but as you can see, it was kind of just like a liquidity grab. Market created this institutional candle, reacted right here, created this, reacted right here, created this, oh, created this, market reacted right in here, created this, market is reacting right in here. So we're definitely on the bearish side at the moment in the weekly. But if you go down lower into the daily chart, you can see, okay, that could also be liquidity, hindsight. But if we go a bit deeper, so you can see, okay, that's to be honest, that's a most beautiful daily a Wyckoff structure that I saw for a while. I'm gonna go deeper just a bit. So what can we see? Market creates liquidity, takes it out. Weren't able to create a new high. Creates liquidity, takes it out. Weren't able to create a new high. Takes low, weren't able to create a new high. What happens now? Market creates a low, another low, another low. So 3 lows and takes it out. Market is able to create a new high. We also take liquidity up here. Okay, that's fine. And what do? We have this institutional candle right here. It's kind of ugly, but we have this institutional candle right in here. Market trades up, trades back in. The buy orders, which are the buy orders are getting a lot more, and the sell orders, which took out those sells, this liquidity down here, are getting out of the market. And what happens right in here? Market adds a lot of buy orders. Yes, then you can see this move. What is this right here? In this candle are a lot of sell orders, which market would be in minus in drawdown when they would just trade out higher. And we also have an imbalance right in here. So what does market? Market takes profits right in here, goes lower, and there what happens? We cannot get off get off the minus orders and trade up higher. We add a lot of buy orders again, and yeah, that's a pretty simple setup for trading the daily, for example, because we have this order block right in here. Boom, boom. What do we have as a target? We know we are in the bearish weekly, so we have to look. Okay, order flow. All right, we have this wick right in here, what would definitely be interesting, and we also have this right in here. So we have an imbalance in here. So would definitely say, okay, this institutional candle is a bit more worth than this, but we also could go a bit deeper. So we can see, okay, there's also a good amount of imbalance in the market. So that's definitely an opportunity. Copy market price, put it in here. And that's your trade basically. As you can see, market traded in, and that's a daily time frame. Market traded in 9th of November. Big profit hit at 19th of December. So we have 40 days of a trade, but it's a daily time frame trade. So as you know, market is fractal. You can trade on the daily what you can trade on the 1 minute. So yeah, it works. It works. All right, back into the structure. So we know we have this right in here. We can definitely go lower on the daily. We also had this reaction which just get the liquidity crap up there. So the main idea is definitely to go lower. What did I mark up here? We had our setup just explained right there, and I'd say, yeah, were the last sell orders, which are not taking out break even or in some other way. They're sitting right here. We have this imbalance right in here. I marked up the 4-hour imbalance. It's a bit different than the daily, but yeah, that's definitely the one main main point where the market should be able to retrace higher or then go down or break the highs. So yeah, that's the the level right here. As you can see, we just reach into this daily imbalance. Okay, took out a bit of liquidity, but we also took out this stuff right here. I can use this right now. Yeah, so we traded into the daily imbalance, had a move up, and now we go lower. What do we have in the 4 hour? You can see we had this down move. We took in a liquidity. Yeah, it's kind of difficult in here, to be honest. So we took in a liquidity, so that's actually a normal high. And there we go higher. So kinda is a break of structure, but also in a liquidity. Yeah, but as you can see, we have a lot of liquidity grabs on the bearish side right in here. Market took it, traded back into, traded back into, and now we traded back into this and had another bearish setup. Or bearish setup, bearish reaction, I would say, or I should say. Now idea is still definitely that we go lower, deeper down there, and then breaking the low. But first of all, going to the 50% of the 4 hour, because we don't really have one level. We have this huge move right in here, and that's kind of aligning with our level right in here. So yeah, and I'm gonna go a bit deeper into the 1 hour after this reaction right up here. You can see we created this liquidity, took it out, market came back into this. It's kind of sad, to be honest, that we traded above this high. Why? Look at this. I'm gonna go into the 15-minute. We created a lot of liquidity, took it out, took this high out, and we weren't able to create a new low, but we kind of created those lows here, which meant to be liquidity, and that would be a nice point of interest. But market just went a bit higher. So if someone's trading 15-minute or 10-minute, I think there would be a great setup. That would be the entry, stop loss right here, then sell off. Yeah, that happens from time to time as well, but yeah, you take it as it is. All right. So what's the situation after this reaction of here? We created a lot of liquidity. We had this trade right into yeah, we had this market trade right into the 1 hour. Created a lot of liquidity up here. So what do we know? Okay, GU has a lot of liquidity up there. AU has a lot of liquidity up there here as well. And we have a level where market can react. The 50% of the 1 hour is still open. That was the idea of last week. You can see market actually indicator at this. That's a Monday. The idea was okay. Get a retracement, trade down low. Technically worked pretty well. Yeah. So we have two opportunities. We had this last huge down move. M30 move. You can see, okay, that's a big wick. Yeah, it's not that pretty. I wouldn't really. I had to see a pretty good reaction right in here to take a trade, but it can happen. It can happen. Yeah. But mainly I'm looking for markets to trade a bit higher, get up into the 1 hour, and then give me a setup down there to trade lower. What we also have, as well as in the Euro USD, we created liquidity down there. So, and the one resistance level which we have is the 8 hour from this move, which I already talked about a bit. Yep. So that's a resistance we have. So what I'm mainly looking out for is right here. If we go low straight away and react here, I would really watch out here, because this can be the shift in direction. If we look this, okay, we're going higher, we definitely can go up right there. So sells up there then are pretty much a bit too risky for me. So I'd really like to go market up there first and then go low, or create a new low first and then either trade the 1 hour, 4 hour structure to go low again, or go up there to go low. All right, that's the AUD USD so far. And next up, we're going into the UCAD. The UCAD. Yeah, it's special pair in my opinion. And yeah, we're going back to the top-down analysis, as you may already thought. And what do we have? We had this move down lower, we have a weekly market reacts there, we have a weekly institutional candle on the other side, reacts there, takes this high, and now we're in this situation. If we see this, okay, that's our breaker structure, market goes higher, we kind of have this inner liquidity or low right here, and we have now two possibilities. I mean, it's kind of the same in the other pairs. We could see this as a breaker structure or as a normal inner liquidity low. But what does align? So we had this daily right in here, market reacts pretty good a bit, and now we have a lot of liquidity up here. That's definitely a target. Market didn't reach there yet, and yeah, so we have the two opportunities. I'm saying opportunities again and again. We have the two options. First option is this: the break of structure, waiting for retracement, going back lower, target down there. Number two is this right in here. We have a reaction going high. So what my idea is here, because we have this liquidity created up there, and we have this, I didn't mark it up, but we have this daily institutional candle. I would market to expect to go up there, take those highs, and then maybe retrace down in here. So we have something like this, and then market decides, okay, do we go lower, straight up, or with retracement, or do we go higher? So I think we definitely can go higher, and if we go at the USD, my idea is to go lower. So let's kind of switch up. Makes sense because we have USD on the first, on the left side, and USD on the other side. Yeah, they're definitely negatively correlated. And yeah, we go a bit lower. We're still in the 3-day institutional candle right in here, marked up there. And yeah, we're daily on the bullish side. As you can see, going down lower into the 4-hour. Just marking up structure for you. What did market create here? That's pretty interesting. So we have those lows created. Higher low, higher low. But actually what we also have is something like a trend line, right? Equal lows, like a harsh level. A lot of liquidity which created here, a lot of stop losses. What do we have here? We have a massive upside move. And before the massive upside move, we had a downside move, which also took liquidity. So we have a reason for market to trade down lower, take those sell orders off. We had a little reaction, creates a lot more liquidity. The market takes those and then goes higher. It's pretty simple if you know what you have to look for. And market does this, trades back into it, we have to 4-hour, trades back into it. I marked up a bit of other stuff, but that's not that necessary. Page 4. And what do we have now? That's our 4-hour now, right now. We are balanced here, so it doesn't really make sense, or that much sense, for market to go below this. Okay, we could react off this 50% right here, yeah, but I don't think so. I don't really think so, because we had this massive move from there. Created new high here, new high here. Yeah, so my idea is, okay, we have this 4-hour candlestick right in here. Oh, that's not meant to be. There we go. And we also have this imbalance plus this mitigation. This last up candle before the down move, kind of like the same, just on the opposite side. And what we also have, which you may have not noticed, we created a lot of lows down here. We had this weekly open, and as you may know or may not know, if the market opens just like this, or maybe also without a wick to the downside, and market just trades into the in one direction, so there are a lot of people which think, okay, that's a yeah, harsh level. A market has, if market's coming next time to this level, it's gonna go up again, something like this. Okay, market goes up because also over the weekend market weren't able to go lower down below. So that gives more evidence to trade higher up there. So what can we see here? As this level, so yeah, the SS level is getting approached. You buy P, market trades low. You buy up here, market trades low. You buy up C, we market trades low. Buys up here. So we definitely can see retail traders, or yeah, retail traders definitely trying to buy this from here. So what happens? Market goes low, down below, takes out the stop losses, goes in to the buy side, and then has this move. So this 4-hour definitely showing the opportunity for us to see a good reaction if it comes back down. So we have the liquidity taken down there. And yeah, so that's our next target, and that's our furthest target. And I would actually do expect from just the 4-hour stage that we come down and then trade up higher those as a target. And if we go a bit lower, first this does, and we have actually the opportunity, right, this institutional candle right in here. We had this institutional candle right in here, and yeah, the market actually can go down here, trade up, trade lower, or we can retrace back into this and then have another setup to trade lower. So I definitely think that's a good opportunity, because as you can see, that's a massive move down. So the massive move down actually just shows how much money came in there, and yeah, let the market trade low. Yeah, so far so good. Yeah, and from there, because we had our arrows on the other, and H4 trend. That's the idea. Yes, so far so good. That's a weekly outlook for the upcoming week, and yeah, let's see what happens. Let's see which opportunities do we get, and yeah, that's so far so good from my side. And I'm gonna give you a few sentences which I actually learned from the one and only Mechler. He's actually a genie, to be honest. His trading knowledge, not just on the technical side, also on the mindset side, is just crazy. And yeah, I'm gonna read it just for you, so maybe you should think a bit about it. Maybe you think, okay, how can I implement them, or how are they true on my side? And yeah, it's about the unavoidable lessons, which yeah, I took notes on. And the first point is, oh, before that, the unavoidable lessons are reminders, which yeah, reminders while somebody, in this case you, which help you right. Okay, I'm just gonna start up again. Reminders while going to approach the markets. As simple as that. I'm not gonna overcomplicate it here. So the first point is that chart work, which we just did now for the weekly preparation, chart work is not the defining factor to succeed. Your mindset and how you approach the markets to success is. So think about it. It just makes sense, because everybody can have an outlook like this, but if he's not actually prepared to take action at the right situations and in the right way, he's not gonna make money. He has to, if somebody has the best technical analysis, can act on his analysis, that's just, yeah, not working. And this is a friendly reminder to keep or stay process driven, not result driven. So if we have this outlook right now, and we have maybe 2, 3, 4 trades next week, and the goal is definitely not to have 1, 2, 3, 4, 5, 10, 15% of net growth. No, that's not the goal. The goal is to have your own trading plan with the entry concept, and to take action on this trading plan on 100% precision. And if you do this, it's actually you're actually just working on the process. So you know, over the time you will make profits, because you backtested your system, right? I hope definitely that you do. And you know your quote over time. So over 10, over 20, over 50 trades, you know you're profitable. You know you're gaining net worth on your account. So that's definitely the point. It's a friendly reminder to keep or stay process driven. That's definitely the point. It's a friendly reminder to keep or stay process driven. You shouldn't be like, okay, I want to make this amount of money next week. No, that's not helping you further, because if your account is bigger and or don't take the bigger account example, you actually just should think about it like, yeah, if I do all things right, if I approach everything with my rules and I don't break them, what worse should happen than a normal loss? You have a small loss, break even, small win, big win. And if you're taking, okay, I want to make 600 bucks here next meet, you're pressuring yourself to take in trades, to go and you may see things in the market you or may see things that actually aren't there. And yeah, so the successful trader doesn't get fixated on the last few losses or wins. He's the one most present on every single idea or experience. He stays detached to the results. That's important. He stays detached to the results. So no focus on the lack or the quantity of results. One trade at a time. Alright, going to the next one. In order to play, there's risk involved. How much can I risk to stay in the game indefinitely? Think about it. With which amount do you feel comfortable at the time? But way more important is the consistent risk management. Don't do it like, okay, this trade looks good, I'm gonna take 1% risk on it. This trade doesn't. I'm gonna take 0.2% risk. Oh, this looks amazing, 3% risk. No, that's not how it's working. You should definitely be able to reproduce your results. So yeah, do it the right way. Necessity or scarcity can lead to permanent decisions or to temporary emotions. So if you have emotions in the trading, think about it. Where does it come from? Does it actually influencing me? Hold on, think about, okay, what do we have? Is it actually worth it to act on it? That's an important part. Feel but not react. And yeah, so those are 3 points I'm gonna give you, work on, or just think about. And yeah, so we're done with the session for today, and I would definitely like to see you into the next video. I guess we're gonna do next Sunday as well, or the following one. And yeah, I wish you a great rest day of this Sunday, or of this time where you're watching it. And I definitely hope you enjoyed what you saw. Give a like, let a comment down below, and if you want, give a abonnement as well. So it's free, why not? Following, you know. All right, so I'm gonna give it up, and I'm gonna let you hear a bit more of the music. So have a good one.